What if the price you see at the gas pump is only the beginning of the story? What if oil getting close to $19 a barrel start affecting more than your next drive to gas station? Because when oil gets expensive, the impact can move through transportation, groceries, airline tickets, inflation, interest rate, and even the stock market. And right now, Brent crude is trading near $19 as tensions around the Strait to Hormuz continue to rise. Concerns about global oil supplies. So the real question is not simply why is oil expensive? The real question is what happens to your money if it stays this expensive. Imagine you drive 30 minutes to work every day. A high gas bill hits your budget immediately. But here is the part most people miss. Your grocery store also pay more to transport food. Your delivery companies pay more to move packages and airline face higher fuel costs. Suddenly an oil story become a household budget story. And there's an other twist. The Federal Reserve is already watching to inflation carefully, and ranked data show US consumers prices were still running above the Fed 2% target. So, what happens if energy prices keep rising? Well, the economy is already showing sign of slowing. That's where it gets much more interesting. Notably, falling inflation gives the Fed more room to consider low interest rates, but high oil price can push inflation back upward, making that decisions more difficult. And we have already seen markets react to changing expectations around rates and energy prices. Now, think about the average American's household. You don't need to own an oil company to be affected by oil. If you spend more filling your tank, you have less money available for restaurants, entertainment, investing, or building an emergency fund. And when millions of households make the same adjustment, businesses can feel it too. That's why today retail sales number matters. US retail sales unexpectedly fell 0.6% in July, the first decline in on 9 months, raising fresh questions about whether consumers' spending is beginning to cool. Now, put those two stories together. Consumers are showing sign of slowing down. Well, oil is moving high because of supply and geopolitical risks. That's a very different situation from simple inflation caused by strong demand. It means the economy can face higher costs at the same time that consumers become more cautious, and that can create pressure from both directions. But there is one more connection you need to understand. Stocks. Higher oil prices don't automatically mean the stock market will fail. In fact, the S&P 500 recently reached a record high even while oil and geopolitical concerns remained it the background. Some energy companies can even benefit from higher oil prices. Other businesses, especially companies with heavy transportation or fuel expenses, Other businesses, especially companies with heavy transportation or fuel expenses, can face higher costs. So the market's impact is not simply oil up, stocks down. It depends on which companies you are talking about. And this is why investors should pay attention to the details instead of reacting to one headline. If oil stays near these levels for a short period, the economy may observe it. But if prices remain elevated for longer, consumers, businesses, and policymakers have less room to ignore it. That's the part I did watch. No one days oil price but whether her energy costs start showing up across more areas of the economy. For your own finances, the smartest response is not panic. Now, how much your monthly budget goes toward fuel, transportation, and other energy sensitive expenses. Keep some flexibility in your spending. Avoid tagging on debit simply to maintain a lifestyle that becomes more expensive, and make investment decisions based on your long-term plan rather than a single oil headline. Because the most important lesson here is simple: oil does not stay in the oil market. It moves through the entire economy and eventually it can reach your wallet. So here's the question: if oil stays near $19 for the next several months, what do you think gets hit first? Gas prices, groceries, stock, or your own budget? Tell me what you think in the comments, and if this video helped you see the connection between something as simple as oil and your everyday money, consider sharing it with someone who should understand it too. And subscribe to Asam Invest for more finance stories that connect to market to real life.